You have Hang Seng, which is down around 0.4%.
Entire due on the pending balance of the GST compensation will be cleared.
The US drug regulator has issued 8 observations in a Form 483 for their Pithampur or Indore facility.
That's the first tick on the index. As expected, 15 points in the green for the Nifty.
Not that surprised that you are seeing, some amount of earnings cut. I suppose these are more in the discretionary space.
As far as Hindustan Zinc is concerned, we always believe in and operate in perfect manners of corporate governance.
The ability to work together with the car makers to assemble their requirements.
Even in this quarter, if you see Nifty's performance, you have seen a 12% earnings growth in Nifty. Expectation was 14%, so nothing wrong.
Things are just up close to about 0.1% on the benchmark indices.
The key to here will be what Minda says to the investors at 5 p.m. today. Remember, they've spent 400 crores buying 15.6% stake, so they also have to go and clarify what is their stance.
The government's continued investments into the infrastructure sector demonstrates that this is here to stay.
The benchmark indices have dipped into the red.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. It's a new week, last hour of this Monday. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi here in the studio. And of course, Nigel joins us from the newsroom floor. Guys, hi. Good afternoon. It's a Monday, but I think we are having a bit of Monday blues kind of situation because it's been down and out from about 11 this morning. There was some hope maybe before that in the first one and a half odd hours, but not after that. It's been basically just a slide. So things are weak. We've been kind of highlighting since last Friday that market remains pretty cueless, right? I mean, earnings are behind us. Earnings give little to no support. Maybe they hurt a little bit at the margin in terms of what they've done to expectations for F524 and beyond. And of course, the global environment is also looking a little tricky, confusing if you want to be charitable, adversarial, I mean, according to some. So we are now on the Nifty testing the 20-day moving average. It stands at 18,388. And actually, when I say testing, with the cut that we have, we are now below the 20-day moving average. 17,826 is where the 20-day is at. A strong close under it kind of flips the very near-term trend from up to down. And that is something we'll have to be watchful and wary about. So watch that level. So 17,838 on a closing basis, up or down, above it or below it, I think will be important. For the Bank Nifty, in a similar way, the support comes in at 40,699. Again, I think we've slipped below it. Now we're at 40,624. I think we've accelerated to the downside in the last 5-7 minutes or so from the time that I send those levels in. That level is the 50% retracement of the recent up move. The recent up move from the 30th of January to the 16th of February high. The 50% is at about is at that level of 40,699. Again, I mean, a close under it, a firm close under it, perhaps is not good news. Banks, in any case, have been looking much weaker than the Nifty for the last many days. IT mid-caps are, last I checked at least, were trading with gains. Maybe that also needs a bit of a revision. Gains are they're still in the green, but barely so, especially in the mid-cap. IT, though, are still a little firm. Dollar index is absolutely flat. That perhaps is the only thing which gives a little bit of hope that, we will see some pullbacks. Friday, equities did sell off. They came out off the lows. Yields were very high. They sold off the highs, and dollar also sold off from the highs of the day. Later, you don't have the US market session. There is a holiday. So in that sense, we've got a bit of a void. So we come back tomorrow morning without US cues to look at. But I think, the dollar yields, etc., those will be important indicators, at least in the futures market, to track going forward. For now, there is clear and significant pressure which is emerging. Guys, hi.
Hi, it's quite a bit of damage, right? The high today on the Nifty was 18,004. So from the top of the trading session, the Nifty's lost about 175 points. It's the banking sector which is taking the biggest knock. The Nifty Bank is down more than 500 points. It's declined for the third day in a row. And if you just pull up the 1-month chart of the Nifty Bank, you would see that recently, this is post the Hindenburg report which was out, and around the budget time, the low was hit around the 30th of January, and that was about 39,400. That level will come up for you again. We're still about 700, a couple of 1,000 points away from that level, but that's going to be an important level to track. We're still 3.5 percentage points away from that. HDFC Bank, ICICI Bank, Kotak Mahindra Bank, HDFC Limited, State Bank of India, all the large cap banking names have taken it on the chin today, Surbhi.
Oh yes, they have. Financials are quite a week. I'll talk about the life insurance in just a bit, but Prashant, I think totally take your point. Till we get more clarity from what Wall Street is thinking of, I guess this is how it's going to be. Having said that, we must take on board the fact that we're still the biggest underperforming market. We're wearing that crown quite nicely once again, which has been really ours to wear right from the start of this year, because a lot of the other Asian markets had a flat to positive close. Europe flat to positive right now. This is a very different picture, and this picture has not been visible in any major global market, at least as of now, this Monday. Coming back to the point on the insurers, there was an interesting flip on a lot of these stocks, because there was some speculation in the market that tax that was rolled in the budget, whether the government will have some sort of a rethink on that or not. But then our colleagues from Delhi did clarify that it's the Life Insurance Association which is looking for a meeting with the Finance Ministry officials right now, nothing beyond that. And there is nothing to believe from the government side that there could be a rollback or a partial rollback or a pruning in any manner whatsoever. The stocks cooled off very, very rapidly after that. We'll, of course, talk about that story as we go forward. Just want to point out the couple of heavyweights that tell you a story about this market. Banks are down, yes. Reliance, is that a pillar? No, not at all. On IT, some of the ones that are fighting the tide, of course, we've named, but look at TCS. A big stock like TCS is still down about 0.5%. And ITC, which was really the shining star of this market so far in 2023, is also succumbing to some profit taking today. So these are, important stocks, and all of them facing selling for one reason or the other. That's the market. Nigel, what are you tracking? Down day, no other way of putting it, I guess.
Well, that's right. The kind of call writing that we are seeing is getting a little bit worrying, because just take a look at the 18,000 call and the 17,900 call. And remember, the options data will be very, very important. We're getting into expiry in the next 3 trading sessions on. So the kind of call writing you're seeing between both those two strikes, you've added close to around a crore shares on. Now, that's aggressive call writing that we're seeing in there. However, what's giving you a glimmer of hope is the 17,900 put as well. The premium over there is around 110 rupees odd. So the hope is that there is some writing being seen at that level. If we deduct 110 rupees from around that 17,900 odd, you're hoping that around that 17,780, 17,890, 17,790, 17,780 odd. You're hoping that that level holds out. So just keep an eye out on that. For the time being, we're hovering around the 20-day MA or the crucial support zone in that vicinity of around 17,830, 17,850. So the hope for the bulls is at least we end closer to those levels. Otherwise, the crucial support zone, as has been the case, is around that 17,750, 17,780 odd. Back to you.
That point is taken. Nigel, thank you very much for that. Let's tell our viewers what we've lined up on closing bell today. Cipla stock slips after the US FDA issues a Form 483 with 8 observations for its Pithampur unit, which contributes over a sixth of its sales. The street worries over the nature of the undisclosed observations.
Goldman Sachs has written a very interesting note on the telecom sector with their views on the 7 most frequently asked questions. Key highlights from that note coming up along with their call on Bharti Airtel.
Bharat Dynamics is higher in trade on the back of a new export order worth $225 million.
We will, of course, talk markets and get some ideas going with respect to investment strategy. Dinshaw Irani of Helios Capital is our alpha manager of the day.
Okay, some 20-30 point pullback from in the last, a couple of minutes or so of trade. From the low of 4615 or so, I think, is what we got to. We're at about 4690 on the bank Nifty, and I think we are from the lows on the Nifty, 17,819 or so. We are back at about 17,850. So there is attempt at a bit of a recovery. 90 down on the Nifty, though, still. How should you position yourself in the last hour of trade? Mitesh is with us for that. Mitesh, hi, good afternoon. Welcome back. I mean, how are you reading things?
Good afternoon, Prashant. I think today, we've had some kind of negative crossovers on the intraday, hourly, and 2-hourly charts, which means that very likely that we'll head towards the lower end of the range. We're actually not very far away from that. 17,750, I think, could be revisited. And the bigger worry will come in case we start breaking below that. Then I think, we might get into a pattern of lower highs and lower lows and see the market correct a bit more. So in that sense, I think, a slightly weakish kind of a setup, but still not showing signs of a big expansion on the downside. But yeah, mildly negative as I would like to put it. On the stock side, Kotak Bank, and in fact, it's the banking index, which is looking slightly vulnerable in the short-term chart basis. And these stocks should correct. So I have a sell in Kotak Bank. Keep a stop about 1747. Look for targets of around 1700. While Balrampur Chini is breaking on the upside, so that's a buy. Keep a stop at about 373. Look for targets of 395 here.
Thank you very much for that, Mitesh. Let's quickly take stock of the telecom sector. Now, today, Goldman Sachs has written a note and they've outlined the 7 questions investors frequently ask about the sector, its prospects and its triggers, and they're trying to give an answer to all those questions. So let me start with the first one, and that's going to be, when will the next tariff hike take place? On that, they're saying, according to them, the tariff hike should be in the middle of this calendar year, though the buy-side expectation is that it will happen towards the end of the calendar year. So that's the first question, a tariff hike. The second one is that what if there is no tariff hike? What will be the impact? Because the street, as I said, is currently expecting a tariff hike. The EBITDA estimates today bake in a tariff hike. If they don't take place, then according to Goldman Sachs, the impact on FY24 EBITDA estimates for Bharti will be 8%, and for Reliance Jio, it will be about 14%. 3, there is also another worry that, the companies may focus on subscriber acquisition and not tariff hikes, because right now they're rolling out 5G. They want to get maximum subscribers on 4G or on 5G, and therefore that's their focus. It's not so much on tariff hikes. According to Goldman Sachs, there is no correlation between the 5G rollout delay and the subscriber acquisition. Point number 4, what changes for Vodafone Idea after the government decided to convert part of the AGR dues, the interest on the AGR dues, into equity? Goldman Sachs says there is no immediate cash flow relief. The cash flow relief will take place only FY26 onwards. But out of the total debt of $28 billion, $2 billion is now getting shaved off because that debt is now being converted into equity. And according to them, it still implies, despite the government backing and the government holding a 33% stake in Vodafone Idea, they see a low probability of the company raising a meaningful amount of external capital. That brings you to the next question. How much capital does Vodafone Idea need? And according to them, it's $8 to $10 billion. Fine. And the 6th question is Industars, right? That's the other important stakeholder. If Vodafone Idea finds it difficult, challenging to scale up, and they actually scale back, what could the impact be on Industars? Goldman says a 41% downside potential. And lastly, how should we think about Bharti Airtel, right? That's the pure play telecom, or one of the big pure play telecom options for investors in India. They're saying there is no meaningful downside risk or catalyst for Bharti Airtel. Their bull case is that the stock goes to levels of 1,098. That's a 40% upside from current levels. But their downside, the bear case, is just 705 rupees, which is a 10% downside. So 40% upside to hit the bull case, 10% downside to hit the bear case. So according to Goldman Sachs, the risk reward is attractive. Any correction should be used to buy into Bharti Airtel. So those are some of the questions and that investors are asking about the prospects for the telecom sector. Deepak Shenoy, the founder of Capital Mind, joins in. Deepak, we've spoken in the past on Bharti Airtel, but now the recent development has been on Vodafone Idea. It's got the implicit sovereign backing. Your thoughts, what changes for the sector, and would you think that this is a big negative for Bharti Airtel? Because across the board, consensus is fairly bullish on Bharti Airtel.
So firstly, we're invested in Bharti Airtel, so very biased on that front. But looking at Vodafone Idea, so Vodafone Idea, to give you a rough idea, I think they lose 7,000 crores per quarter, mostly on interest and depreciation. They make 4,000 crores in operational profit. So that's, sales minus operational expenses. So even if they were to up their prices by 10 or even 20%, that will add only maybe something of the order of 1,000 crores to their top line. But their bottom line, PAT, is actually minus 7,000 a quarter. So it will not make a meaningful difference to the fact that they continue to have a substantial amount of interest to be paid. Only 10% of the total, dues have been converted to equity. They are also net negative equity by about 76,000 crores, which after the government conversion will still be minus 60,000 crores on negative equity, and there's been no hope of any promoter increasing stake at this point. I mean, I know that everybody's talking about it, but it's not happened. Given this, and the fact that they can't raise their price by more than 10 or 15% because that's where Jio and that's the range in which Jio and Airtel's margins or plans are at the same point. I don't see this as a very positive thing for Vodafone. And the implicit government backing is almost like saying right now the government's got this stake by not actually paying for it, but because they couldn't see a sign of recovery from Vodafone Idea in the first place, they converted part of it to equity. I don't think this actually means a backing in any meaningful way. So, I think the market share from the losses of Vodafone will flow to Airtel and Jio, both of which we are invested in. So biased in my opinion there. I think they're going to be the eventual winners. Vodafone probably, has to dig its way out of the hole that it's in right now.
So according to you, very quickly, what's holding back the telcos from raising tariffs?
Demand. If they raise tariffs, demand goes down. We've seen that happen in the past. I don't think there's a lot of appetite for at the mass scale for a 10 to 15% hike. I think it'll come slowly. There'll be 5% hikes every half year to ease the effort. Now, the prices are not very high. In 2004, I remember I used to pay 10,000 rupees a month because I used to do a lot of across the country calling. 10,000 rupees a month. Today, a prepaid unlimited calling plus 1.5 GB per day plan costs 2,900 rupees a year. So you could get, the rates have actually fallen quite substantially. At the top end, there is still some scope for increase in prices. But at the bottom end, I don't think there is too much. I would think that they would actually increase prices at the top end, but keep the prices constant at the bottom end. That won't change their top lines too much. I think demand will just fall off a cliff if they increase prices by much more at the bottom end.
That's an interesting take, Deepak. Yeah, listening to you carefully, I guess that's what happens in so many industries, right? It is the top end that subsidizes the bottom end. Maybe telecom goes the same way. We will find out. Stay on. We have more questions for you. The next one's going to be on Cipla. Now, that stock is the biggest Nifty loser today. Slam dunk, 6 to 7% down. So what's ailing Cipla? Well, the US FDA, to put it mildly, because they've come in and inspected their Pithampur facility, and they have come out with 8 observations. Now, Ekta is joining in. Ekta, I know that we don't have the exact nature of these observations and what the FDA's issues are. Why is the street so worried about this one?
Well, the nature of the observations is what the street is worried about, and the fact that they are 8 in numbers. So that the assumption is that, it's probably going to be difficult for them to solve 8 observations. And one of their key drugs is filed from this particular facility, which is basically the inhalation drug Advair generic. So that, the estimates are that they could probably hit the market by Q1 of FY24 when it comes to Advair generic. Now, with the company having received 8 observations for the Indore facility, with the quantum being high and the, assumption that the nature of the observations will be difficult for them to solve it quickly, assumes that Advair generic will now become an FY25 product. And there is a past precedent that they are going by. The Goa facility, which is also an important facility for the company, did receive a warning letter, and a Brixon generic, which is a cancer drug, is filed from that particular plant. If in case we did see a Brixon generic also getting delayed, and that is expected to be an FY25 product. Now, that is the worry which the street is basically currently contending with when it comes to Cipla. Now, I just want to put it into perspective in terms of news and the Indore facility as well. They manufacture respiratory products as well as oral products. This particular plant, the Indore plant, it is one of their key plants, and it contributes to around 25% of their FY23 EBITDA. So it is an important plant for other products as well. Now, Incred has written on this. They maintain a hold, but they've cut the target price. They believe both the products, Advair generic and a Brixon generic, are likely to see a worse competitive landscape in FY25 versus FY24. Macquarie, JP Morgan, both have an outperform overweight rating on Cipla respectively. JP Morgan has said they currently forecast Advair generic launch in Q1 of FY24, 5 to 6% contribution to EPS in FY24 and 25. Well, the proof of the pudding is really going to be in terms of what the Form 483 holds, because in the past we've seen many observations solved in just a couple of months and few observations resulting in adverse reactions.
Got that, Ekta. Thanks very much. I guess it's just that when you've had such a dream run, a one-way move on a stock, then anyway, these issues become perhaps excuses for some profit taking. Pull up a long-term chart on Cipla. From the lows of 400 odd, that's where it was when the lockdowns happened in 2020 in March. From then, it rallied all the way to 1100. And this year, it's kind of cooled off. Cipla, this year, is, as you can see, is down about 10%. If you look at a one-year chart, it's been a dream run for this one. Deepak, what's the sense? I mean, I can understand why people would want to get off quickly the moment they sense any sort of negative news. But what would your advice be?
So no positions here. Surabhi, I think the problem here is the FDA is back. So I think, the 483 is, of course, it's not disclosed yet. So we don't know the observations yet. But if it results in a warning letter, then there will be, there could be it could be a much more adverse reaction depending on how Cipla responds to it. I think, they've seen this in the past. I think in 2020, they got a warning letter. There was corrective action and a lot of things that happened at that time. But in general, I would say, this is the only performing pharma stock. Most of the others from 2015, their charts just look horrible. They've, a lot of companies have retraced quite substantially now, even the mid caps. So I would say over here, the FDA risk is back. So anyone who's targeting companies, who has companies in targeting the US market, mostly unbranded generics, I think that might be, or that the FDA thing may be the Achilles heel here for a recovery. When we don't have any positions, and honestly, this action kind of brings those fears back for us as well. So don't have a position. That's all I can say.
All right. Hi, Deepak. Deepak, we're dreading a very scorching summer that's due. And already it's got quite hot here in Mumbai. Voltas, it appears the street is sensing that there's going to be some inventory stock up or some, pre-season buying that could take place. That one's up close to 10% in this year. It's been a relative outperformance, and the numbers have been far from inspiring. They've lost market share. The margins as well have been under pressure. How would you approach this pack, whether it's Voltas, Blue Star, or the other companies from this space?
So I think there's even Amber if you go up the value. I mean, the chain of manufacturing itself. But there's again no positions here. But I would say we always get excited about these stocks just around at this time, right? Ice cream stocks will go up right around now because we'll say how summer people eat ice cream, kids have holidays and so on. So these are like stocks of cyclical interest in that sense. But unless there is a shortage of any sort, I don't think prices can go up meaningfully in terms of AC prices itself. I don't think there's a capacity to take substantially increased prices at this point. So we'll have to see volumes. I don't believe this summer will be meaningfully different. The last summer was not as bad, so maybe there is going to be contributory buying. But I would say in general, the cyclical nature of this does not make it interesting. Voltas is more a long-term stock, so I think one has to look at it from that perspective. We don't have a position. We think it's expensive, but it's a solid company that way. There's no doubt about the brand itself. So good company, bad price, so not interested at this point.
At that time of the year when you get your AC's service, right?
Oh, yeah.
This conversation about ACs reminds me to do that. But consumer durables is a space, Deepak, right? All bombed out completely. Significant price damage in that space. By the way, on a lighter note, you said you used to run up 10,000 rupee monthly bills in 2005, you said, right? Four.
Well, that was, that was just before I was getting married. So my wife was not in the same town.
Prashant is noting all the right nuances here. It caught my attention as well. Just saying,
Deepak must be thinking I answered. I spoke about Voltas, I spoke about other sectors, and the only thing Prashant picked up is phone bills. No, I was just at a different time, and absolutely, I remember that. Deepak, we'll take a very quick break here. Stay with us. We'll come back in just a bit. We'll sort of have a few other questions, but we'll also have Dinshaw Irani of Helios Capital India joining in on the other side to take the conversation on markets forward. There is pressure, but we are off about 30-40 points from the day's low. Stay with us.
Welcome back. 17,850 on the Nifty. Mid-cap so far are holding up in the green. The mid-cap index has just a minor gain of close to about 0.2%. Some of these stocks which have gotten added in the FTSE indices, whether it's the small caps or mid-cap, but names like Cera Sanitary Ware, 8.5% higher. Triveni Turbine, 5.5% higher. Kalyan Jewelers, up 5%. So these are stocks where you are seeing buying. The FTSE rebalancing impact and the fact that they've gotten added, their weightages have gone up, and that's fueling a rally there. IT is also having a pretty okay day, especially mid-cap IT. And here, two names stand out. One of them is Nucleus Software. It's up 6% today, but this month, the stock has rallied 45%. Nucleus Software is the one that we're talking about. And the other one is Sonata Software, and that's gone ahead and hit a fresh 52-week high with an 8.5% rally. But the other segment, the other sector that we're tracking are the insurance companies, and they're in focus as government sources tell CNBC-TV18 that the government has not drawn up a proposal to raise the 5 lakh insurance premium limit, which was introduced in the budget from 1st of April. Tim C is here with the details. Tim C, the street got very excited at the possibility that there could be some relaxation on that front. What is it that you've picked up from the government sources?
First, let me put the backdrop to it. It was in the speech that Finance Minister did announce that government will not provide any tax exemption on maturity benefits if the aggregate annual premium paid by an individual is above 5 lakh for a life insurance policy which is issued on or after 1st of April 2023. Now, this particular proposal has sent jitters in the life insurance community, and that's why the Life Insurance Council is now seeking time from the Finance Ministry to meet the officials to try and build up a narrative that this particular proposal of the budget needs to be diluted. Apart from that, when we cross-checked about it with the government officials, top government officials have told CNBC-TV18 that yes, a particular meeting has been sought by the Life Insurers Council of India, but there is no proposal that has been drawn. There are no deliberations that are going on. To be fair, this meeting is yet to be scheduled. They have just been informally told that yes, government is okay to meet you guys. But yes, whether this will actually lead to anything, well, sources say nothing as of now, because government is very clear in its thinking that this particular move, if at all is diluted, will only benefit the rich, which is not the idea of the government. And government feels that those who can afford to pay a premium of 5 lakh rupees per annum or more do not require any tax exemption. So let's see whether this particular meeting, once it is scheduled, is actually able to change the minds of the people at Finance Ministry or not. That is something that we'll have to wait and watch for.
Timsy, thanks very much for that. Stocks, of course, did see a flutter of excitement, but all of that was given back today. Names, especially names like HDFC Life and Max Life, two of the most impacted because of these rules. Deepak, do you own any of the life insurance names? Any thoughts?
Yes, in fact, I own LIC, Prashant. So we've they're not too badly affected. I think there's only 1 or 2% of the premiums that will kind of come in from those kind of people who put more than 5 lakhs. In fact, the next 2 months, all of these insurers will get a lot of premiums because the any plans that are bought now till March 31st. They still qualify for the tax exemption on exit. It's only policies bought after March or after April 2023 is when they get taxed on exit. So you can imagine that this quarter will be heavy selling on the tax front. But insurance plans were never meant really to be savings plans per se. It's like, if you die, yes, your family should get money, and that continues to be tax exempt, whether you pay 5 lakhs premium or 10 lakhs premium or even 10,000 rupees of premium. But it's when you save and then you survive and take this massive amount of money, which is largely an investment product. The insurance component tends to be very, very small in these. That's when the government is saying, listen, this is actually an investment and you should be paying tax on the gains. However, the structure is really negative in the sense it's not capital gains. You don't get to adjust for inflation indexation. You just get to, you pay the tax on whatever your returns are minus what you've paid. And a lot of details in that are not very, very clear. So I think, the government probably should consider calling it capital gains. But beyond that, I would not expect much of a reprieve. I think HDFC and Max will be more affected than this, than ICICI and then SBI and then LIC. So in that order. Okay. But no investments in any of them other than LIC.
All right, Deepak, thanks very much. Good kind of comprehensive explanation, and thank you very much for joining us with that view on the markets as well. Thanks indeed. Dinshaw Irani is now joining us. He's Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here on the program as always. Just a quick word on the market itself. I mean, I think there is widespread acknowledgement after third quarter earnings that things have slowed down a little bit. We had Sanjeev Prasad of Kotak who kind of said that. The only question is, we had Prashant Khemka, White Oak, with us on Friday on the aftermarket program. He kind of acknowledged that. But how long this would last, goes back to the reasons why it is so in the first place. What are your thoughts? Is this just transitory nature? As the inflation problem comes off, as rates peak, things should come back to normal in terms of consumer spending. Then go on.
Thank you, Prashant, for having me on the show, and very good afternoon to you and your viewers. So, Prashant, basically, there was this aviation show held last week, and one of the shows was perfect replica of what was happening in the market. There was this fighter aircraft which came down, did a few barrel rolls at one low levels, and then moved up again into the blue yonder as such. So I think we are in the midst of those barrel rolls, and frankly, I mean, one of the reasons is the way the numbers are coming out. And I mean, though Lever called out, Unilever did call out green shoots in rural economy, but you didn't see that across in others also. So, and frankly, I mean, in the case of durables, there's a marked slowdown. That is no doubt about that. You talked about ACs. I think it's more of a stocking which is happening now thanks to the season. By the way, thanks for reminding me for getting my AC service at home. So I'll be doing that shortly. But anyway, the fact is that things are looking stretched a bit, and really it's also the global market where the problem is coming from.
Hi Dinshaw, good afternoon. Nigel on this side. Dinshaw, I wanted to ask you about the IT pack. Even in today's trading session, the market's a little bit under the weather, but that's been doing quite well. You've highlighted numerous times that you wouldn't get in, at least the last time we chatted. Still staying away from IT?
So basically, Nigel, the fact is that probably we've been wrong in this for year-to-date figure of 1.5 months or so. Our call was to stay away from IT, and we were right the whole of 22. But I think it's more of a trade which is basically that they didn't perform the whole of 22 and they'll perform now rather than actual fundamentals kicking in. You look at what the guidances are going to be. I don't think it's going to be, I mean, when the March guidance come out, though the indicators in December itself was not that healthy. I mean, the December quarter numbers was not at all healthy in the sense that one saw the employment levels coming off and in fact layoffs happening in certain companies as such, which was like the first time ever when they started reporting numbers. So you'll see that the guidance for the March onwards year would be roughly around 6 to 7 to 8 odd % in constant currency terms, though. That shouldn't be that exciting for them to command P's of 27, 28 times. And frankly, I mean, if you go back to pre-COVID levels, they're still at some 30-35% premium to their P's to pre-COVID levels. So I don't think we don't believe that's going to last for long. And frankly, I mean, may just come off once the global numbers also start trickling in.
Dinshaw, hi, good afternoon. Surabhi here. Good to be chatting with you after a long time. You know, the one narrative that I hear building up a lot at the end of the third quarter result season is a weakness in consumption. Now, some people are pointing more towards the discretionary side. Then, of course, a lot of analysts are talking about the bottom of the pyramid as well, where there is pain, and we know that. I mean, that's been happening for a while. But what does all of this mean for investment strategy for this year? You know, would you be looking at the consumer basket? If yes, what side of it? There is consumer technology, then there is FMCG, then there is just pure discretionary. We were discussing ACs a while back. How do you play the consumer this year?
So we basically, you talked about down trading and all, one saw that quite rampantly in FMCG segment per se, where the premium segment took a hit and came off a bit. But I mean, on durables also, one is hearing the soundbite from retailers also and companies also that things are not moving as well as they were doing. But our belief is that this is more of a transitionary thing. I mean, it will be probably a couple of quarters before things start looking up. And frankly, as I said, that globally also things are not looking that great. So for India to start performing against the globe, the global markets have to stabilize, and that doesn't look like happening in a hurry, given the fact that in the US, you're talking about, I mean, the common theme was that the Fed will stop at 5.25, but now the increasing sound bites are that it'll stop only at 6 and hold it there for longer. If that's happening, obviously you're not talking about a fairly steady markets globally itself. So that will make India also fairly jittery, and I think the consumers will hold back to that extent. And inflation has not been a problem in India, but I think if globally it raises its head, it's obviously going to be an issue going forward for us too.
Dinshaw, what is the recent price action in the banking stocks telling you? Names like ICICI Bank, State Bank of India are trading even lower than what they were prior to the Q3 earnings, and we know the Q3 numbers were blockbuster for them. Record profits coming in, improvement on every single parameter, and yet the stocks are trading lower, and we saw EPS upgrades as well. I know there is a lot of worry on the Adani Group side, and perhaps that's keeping a lot of investors on the fence, but what is this price action telling you? Because this is an over-owned sector. There is consensus bullishness. Do you think, given the price action, all of it could be in the price? What have you made of it?
So, Rima, basically what it tells me is to go out and buy. Unfortunately, I don't have money right now to buy more. But the fact is that look at the numbers, right? I mean, you talked about the quarterly numbers. They were fairly, I mean, they surprised on the positive side for most of the banks that reported the numbers, except a handful, which have their own set of issues. But the fact was that what is coming out is that people are assuming that the NIMs have peaked out. They may compress from here on. Our call is that maybe that will happen in a quarter or two, but beyond that, if demand kicks in the way we expect it to, obviously you're talking about the NIMs sustaining their levels and the demand kicking in. So basically the numbers will again surprise on the upside going forward, and that's what we're hoping for, and that's what we're playing for. And frankly, I mean, the valuation front also, they're quite appealing as such. In fact, we have a limit of 7.5% to which we can buy a particular stock. And most of the names that you mentioned, we are at full limit right now and can't, unfortunately, buy any further beyond those points.
Okay, Dinshaw, always a pleasure having you on the show. Thank you very much for joining in. We'll look forward to our next conversation soon. Sure. That's Dinshaw Irani and a view from Helios Capital. The news from the market is that we are still down. It's 100 gone on the Nifty. Banks are leading the losses. No change in that headline. We'll take a quick break, come right back, and as always, we'll get you a check on what the dealing room chatter is like this Monday afternoon. And of course, we'll get you some trading calls for the last.
Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, market action has been quite subdued today with the Nifty down close to around 100 points. But Nimesh, he's the man of the moment as always at around 3 p.m. Nimesh, what are you picking up in terms of D-Street chatter?
Hi, Nigel. You know, as you rightly pointed out, at days low, but, you know, it's largely lacks buying interest. You know, there is lack of follow-up buying. That's the general feedback that I'm picking up. The flows are muted at FI desk. We are not going to see any cues from the US market tonight, so we have to react tomorrow to our own internal cues. Technically, we are very much close to that key support level of 17,800, so that needs to be watched. But having said that, there is a lot of stock-specific action. So market is clearly focused on individual stocks now. So for the time being, the feedback is don't look at Nifty or the Bank Nifty very closely, but look at a lot of outperformance in the broader markets, and that's exactly what is playing out in today's market as well. In terms of sectors, well, financials continue to drag, but even within financials, today for some reason the insurance companies are doing good and they're buzzing in trade. The other two sectors which are really getting chased now is technology and cement stock. Technology has been a big outperformer for the last many days, and that's been the case today as well. And there is a fresh buying interest in cement stocks as well. So these two sectors stands out. But broadly, I guess there is lack of follow buying, but there is a lot of interest and a lot of participation in the broader markets, and that's something which one should not ignore it.
Well, that's right. If you see the Nifty, you're down close to 100 points, but the mid-cap index is mildly in the green. So plenty of action taking place there. Tell us about a few more stocks.
So in terms of individual names, the first stock on my list today is PVR. Again, a very strong buzz and indication of a large block deal coming in PVR very soon. Remember, the private equity investors have been sellers in PVR for the last many months now, and that seems to be the trend again as well. So that's the first stock. Second stock is Bajaj Finserv. Again, consistently, this is one stock where there is buying interest back from the larger institutions. And though in today's trade, it's a price limit buying, but there is buying interest in Bajaj Finserv in today's trade. The third stock is Power Grid. Again, a stock more like a defensive play within Power Grid, but again, there is buying interest in Power Grid as well at some large FI desks in today's trade. And the last one is Hindustan Aeronautics. After a big move last week, some bit of profit booking and some bit of selling as well. So under pressure in today's trade, largely on sell flows at a leading FI desk. So the delivery volumes are expected to be quite high in Hindustan Aeronautics in today's trade.
Okay, well, Nimesh, thank you very much. Interesting list as always. PVR, keep an eye. A block is coming, Nimesh says. Well, Mitesh is with us now to tell us what to buy or sell today for a reverse trade when we return tomorrow. Mitesh, hi. Afternoon again. I mean, we're right there, down 100 on the Nifty. Anything you want to suggest in terms of a quick trade?
Prashant, one buy and one sell trade. Metropolis is something which is closing with strength and it's reversing from a good correction. So that's a BTST with the stop at 1345 for targets of 1385. Well, Nestle, I think last 2 days it's kind of triggered some kind of a declining trend. It seems it could possibly head much lower, but that's a positional view. But even in the short term, I would take a STBT trade here. Keep a stop about 18,900, 925 maybe, and a target of around 18,500, 550 for tomorrow.
Oh, thank you very much for that. Another stock on our radar today is Bharat Dynamics. The company has won an export order which is worth $255 million. So this is a little more than 2,000 crore rupees, and the stock is up 5.5% despite going ex-dividend by 8 rupees. So if it wasn't for that, the stock price would have been higher by nearly 1%. Now, why is the street so excited? Because in the run-up till Q3, the company's overall order inflows had disappointed the street. The company had guided for order inflows of 10,000 crore rupees for FY23. And I'm reading out from this ICICI Security report, which came out post the Q3 numbers, and they're saying that the order inflow up until 30th of November was only 3,000 crore rupees. They've seen order inflows of 3,000 crore rupees, but their guidance was for 10,000 crore rupees. So there was a big shortfall, as a result of which the stock had started underperforming. But now they won this large order, which is worth 2,100 crore rupees. So the street is, a bit excited, and it's higher despite going ex-dividend.
That explains the moves on Bharat Dynamics. Also, it gets added into the FTSE small cap index. So again, more buzz and more news flow surrounding it, keeping it elevated today. Let's bring in our next guest on the show. Neeraj Diwan of Quantum Securities is joining in. Neeraj, good afternoon. Great to have you with us on Closing Bell. Since Rima brought it up, I don't know if you track Bharat Dynamics or have any interest in the stock. If not this one, defense is a big play. We all know the kind of expenditure that's happening on that side of it. So is there anything else, BEL, I don't know if you want to put Bharat Forge in that basket, any other stock via which you would look to play the defense theme?
Yeah, good afternoon. Yeah, definitely. I think the kind of investment which is going in defense and the kind of order inflow that is there for these companies, I think the story is still intact, and the companies, and in the last quarter, normally the ongoing quarter is normally a good quarter for execution, where a lot of execution is, execution picks up and a lot of orders are, executed. So from that category of stocks, my top pick has been Hindustan Aeronautics, and followed by Mazagon Docks and BEL in that order. So these three companies, even after the run-up that we've seen, I don't think Hindustan Aeronautics is that expensive. You know, if you're looking at the order book and the kind of growth that's going to come there in the next 3-4 years. And same is with Mazagon Docks. I think they're lumpy orders and they're going to execute it. Now, this last quarter will also see decent execution. So looking at the order book and the growth the next 3-4 years, these stocks still look promising.
You know, just put on the market breadth, it's negative, more down than up. But you just look at the kind of stocks and the volumes traded on names which are up and names which are traded down. And volumes are tremendous on stocks which are going up. And the volumes are not all that great on names which are going down. And I think that's a good signal that while, you know, numerically declines outnumber advances by some 600 on the NSE, you know, the enthusiasm and the excitement on names which are up is quite healthy. Look at names like, you know, we just spoke about Bharat Dynamics and the defense names. Zomato is up 6%, Sonata Software is up 8%, Star Health is up 10%, Happiest Minds is up 5.5%, Sera is up 8.5%, Equitas Bank is up 6%, Zentech, Kalyan Jewelers, All Cargo coming back about 6%. So many other names, Credit Access, the MFI, Gokuldas Exports is, you know, actually Gokuldas is an interesting name. Numbers were not all that exciting. We spoke with the management, they said that business should pick up in H2 of FY24. And, you know, from 350 stocks up to about 425. This is the last 6 or 7 trading sessions on Gokuldas Exports and so many others. Neeraj, any thoughts on names like All Cargo, anything specifically on All Cargo? Again, it sold off quite a bit after results, and then Gokuldas Exports.
Yeah, first with All Cargo, see, the business model is very good. The kind of, you know, booking that they do for, you know, small containers, small load, I think their business model is very good. And you did see some correction after a good up move. But I think valuation-wise, still I find this attractive. I think the stock should again continue its upward journey. So All Cargo still remains that one of the preferred bets in the logistics space. And then come to the export and the textile space. I think that is one space we saw a lot of damage, and, you know, though we've been hopeful of stocks doing well, but nothing really come, whether it's the domestic textile or the export. They've not really been able to perform. One is because the margin pressure, which was due to the cotton prices, which now have started coming down, though not to the extent where people had expected them to come down. But still, you know, at the current prices and the current new purchases that these people have made, I think the inventory should have got over by December. So this March quarter can see some improvement in margin in the textile space. So I think textile space from that category, you know, should be looked at for a medium to long term perspective.
Neeraj, do stay on. Need to slip into a very short break. The Nifty is hovering exactly around its 20-day moving average of 17,848. So it's not able to climb much above those levels, nor is it declining significantly below that. 20-day moving average is where the Nifty is at. Get into a break. We'll come back, continue our conversation with Neeraj, and also get in the closing rates.
Okay, just 2 minutes to go for market closing, a little more than that, counting down. 100 points lower on the index, 17,845, and just, you know, basically escapes the 20-day moving average, or a close below the 20-day moving average by about 10 points or so. 17,838 is the 20-day, and we'll end around 17,847. I mean, I think the average price should be around these numbers, because not very much happened in the last 30 minutes. There was a pullback earlier on, but not in the last 15-20 minutes of trade. So losses in the large caps in names like Adani Enterprises, Britannia and Cipla. These were the meaningful large losers. The problem was, you know, there wasn't very much, there wasn't a long list of names which was higher in trade, and as a consequence, the index ends down and out in terms of today's session. Prima.
Well, IT was the only space where we did see some steady buying. The Nifty IT index ends with a gain of more than 0.5%, and the gainers list includes Tech Mahindra and Infosys in the large caps, And in the mid-cap space, you had gains coming through for Nucleus Software, Sonata Software, L&T Technology, that was up close to about 1.5%, and many of the other mid-cap names, something like Cyient, Happiest Minds, Persistent Systems, ends with a gain of close to about 3%. So IT was clearly the bright spot today. Apart from that, you also had gains coming in on many of these FTSE additions, so whether it's Sera, Kalyan Jewelers, Triveni Turbines, Bharat Dynamics had an order win boost, and so did KEC International. KEC International was up nearly 2%. On the losing side, in the mid-cap space, you had cuts coming through in Suzlon Energy, Indiabulls Real Estate, softness in many of these banking names like UCO Bank. That ends with a cut of about 3%. Subi.
I'm also looking at mid-caps, Reema, and actually you have some good movers beyond all the headlines that we've discussed. Look at a Star Health. There's an 8 to 9% up move on Star Health. Look at an Equitas Small Finance, 6% up over there. Dishman, Happiest Minds, JBM Auto. It's not a bad day, actually, if you're looking at some of these stocks. Even Zomato, for that matter. Zomato's gained, what, about 5.5%. Sumitomo Chemicals, almost 11% higher. So interesting day for mid-caps. And that's what the market seems to be all about right now. Individual stocks, very nuanced selection. It's no longer one big tidal wave that's moving in either direction, neither up nor down. That's the shape of the market. The Nifty finally going home with a cut of about 0.5%. Bank Nifty down 1%, making India definitely one of the poorest performing large markets around our neighborhood.
Indeed, the Nifty is down close to about 1% so far this year, with the banks down. The Nifty Bank down close to about 5.5%. The closing bell has gone. The Nifty is ending at 17,847, and that exactly, my friends, is the 20-day moving average. Remember, US markets are shut tonight, so no global cues. We'll be tuning in to our own local domestic cues. Get into a break. On the other side, we'll get you key excerpts from our conversation with some of the big companies that were in focus today.